Hello traders, welcome back to ComLucro. Today we're starting part 1 of a 4-video series where we break down the 50 most powerful psychology lessons from Mark Douglas. If you've ever hovered over the buy or sell button with your heart racing, if fear, greed, or frustration have ever blown up a perfectly good plan, you're not alone and you are not broken. Every trader has been there. The truth is, what separates winning traders from everyone else is not a secret strategy or a magic indicator. It is psychology. And few people understood the trader's mind better than Mark Douglas, author of Trading in the Zone and The Disciplined Trader. Across this series, we will explore the lessons that help you master your emotions, stop sabotaging your own trades, and build real consistency in the market. Most traders focus entirely on strategies, entries, exits, and indicators. But the real foundation of consistent profitability begins in your mind. Without the right mental framework, even the best strategy eventually breaks down. So, if this type of content is valuable to you, remember to like the video, subscribe to the channel, and enable notifications so you don't miss the upcoming lessons. And feel free to share in the comments which topics you would like us to explore in future videos. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to continue producing this kind of educational content. Now let us explore the principles and core beliefs Mark Douglas taught. Ideas that reshape how successful traders think. Lesson 1. Accept uncertainty. Traders lose because they crave control. They wait for the perfect setup, the perfect signal, the perfect moment. But the market does not owe you predictability. Trying to control outcomes leads to hesitation, emotional decisions, and unnecessary pressure. The most liberating shift is to embrace uncertainty and stop asking the market for guarantees. When you understand that you cannot control individual outcomes, you begin focusing on what truly matters. Uncertainty becomes part of the game instead of a threat, and your job becomes managing probabilities, not searching for perfection. Lesson 2. Think in probabilities. This is one of the most important ideas Douglas presents. Trading is not about being right. It's about thinking like a casino. A casino does not care about one hand of poker or one spin of the roulette wheel. It cares about the edge repeating over hundreds of trials. As a trader, your responsibility is the same. You are not trying to win every trade. You're trying to execute consistently so your edge plays out over time. Even a strategy with a 55% win rate can create wealth when executed with discipline. Lesson 3. Focus on process, not outcome. In trading, you can do everything correctly and still lose money on a single trade. That does not mean your plan was flawed. It means the outcome was random. Professionals do not chase wins. They chase flawless execution. They follow rules, manage risk, and act without hesitation. When you respect your edge, each trade becomes one data point inside a much larger series. This mindset separates traders from gamblers. Success comes from repeating correct behavior, not from the outcome of 1 or 2 trades. Lesson 4. The market owes you nothing. You can study for months, analyze every indicator, and still lose on a trade. The market is not a teacher, a parent, or a friend. It is a reflection of mass psychology. Billions of decisions colliding in real time. Douglas emphasizes that the market does not care about your expectations, your hopes, or your effort. This realization is powerful. When you stop expecting the market to reward you, you stop feeling betrayed when a trade goes against you. Losses stop feeling personal, and your decisions become clearer and calmer. Lesson 5. Confidence comes from acceptance, not prediction. Most traders believe confidence comes from being right. They think winning will make them feel secure. Douglas reverses this idea. True confidence comes from accepting that any trade can lose and being completely fine with that. When you no longer fear being wrong, hesitation disappears. Overanalysis dissolves. You execute with calm precision, not because you know the future, but because you have accepted uncertainty. Professionals do not try to control the market. They control themselves. Lesson 6. Detach from the need to be right. Many traders attach their self-worth to winning. When they win, they feel intelligent. When they lose, they feel inadequate. This emotional connection is dangerous. It causes traders to hold losing trades, avoid stop losses, and double down to prove a point. Douglas teaches that being wrong does not make you a failure. It makes you a trader. Even great traders are wrong often. When you detach your identity from results, you trade with freedom and objectivity, building the consistency you could not access before. Lesson 7. Fear of loss is a learned response. From childhood, we are taught to avoid mistakes. In school, the stakes are punished. In life, they are judged. So it's no surprise that traders panic or freeze in the face of losses. But Douglas reframes this completely. In trading, losses are not mistakes. They are part of the statistical process. Even a perfectly executed trade can lose. And that does not mean you did anything wrong. When you see losses as business costs instead of personal failures, fear loosens its grip. You gain emotional freedom to execute without the pressure of being perfect. Lesson 8. Pre-accept risk to stay calm. Douglas presents one of his most practical tools. Before you click buy or sell, accept the risk fully. Ask yourself if you're genuinely comfortable losing the amount you're risking. If the answer is no, you're not ready. When you enter a trade hoping not to lose, you're trading emotionally. But when you accept the possible loss before entering, the outcome no longer dictates your state of mind. Whether the trade wins or loses, you remain steady. This single shift can transform you from reactive to professional. Lesson 9. Overcome revenge trading. Every trader eventually faces this trap. You take a loss, it stings, and suddenly you are no longer trading. You are fighting. Revenge trading is one of the most destructive emotional reactions. It floods your mind with urgency and anger. You abandon your plan, increase size, overtrade, and quickly create a deeper drawdown. The solution is awareness. When you feel emotional heat rising, step away, breathe, reset. Remind yourself that your job is not to win back losses. Your job is to follow your plan with discipline. Lesson 10. Greed is uncontrolled hope. Fear keeps traders from acting. Greed pushes traders to act too much and too early. Greed is not always aggressive. Sometimes it is subtle, like refusing to take profits or doubling down because the trade might go further. Douglas teaches that greed is simply hope disconnected from a plan. When you trust your system and your statistical edge, you do not need to hope. You just execute. Wanting more is not the issue. Acting based on desire instead of rules is what creates emotional instability. Lesson 11. Emotional swings create inconsistency. One day you feel confident, the next you hesitate. Some trades feel effortless, others feel stressful. This emotional roller coaster destroys consistency. Douglas explains that inconsistent results come from inconsistent states of mind. If you react emotionally to wins and losses, you cannot create a repeatable process. The solution is emotional neutrality. A win should not make you reckless. A loss should not make you fearful. Each trade is just one of many. Neutrality is not about eliminating emotion. It's about observing emotion without being controlled by it. Lesson 12. Detachment is power. Detachment is not coldness or indifference. It is freedom from outcome. Douglas reminds us that you are not your trades and you are not your P&L. When you disconnect your identity from performance, trading becomes cleaner and calmer. You make decisions based on logic, not fear or ego. You no longer fear losses because you have accepted them. You no longer chase wins because they come naturally when you follow your process. Detachment is one of the highest forms of mental discipline. Lesson 13. Self-awareness is your superpower. Most trading mistakes happen not because of bad strategies, but because of emotional blind spots. Douglas teaches that self-awareness is the first step toward emotional control. Ask yourself why you hesitated, why you exited early, why you felt anxious before entering. When you can answer honestly, you begin seeing the emotional patterns that lead to mistakes. And once you can see your patterns, you can change them. And with these 13 lessons, we close part 1 of this 4-video series on Mark Douglas and the psychology behind consistent trading. These first ideas are the foundation. They reshape how you see uncertainty, losses, confidence, and your own emotional patterns. In the next videos, we will go deeper into the principles that transform your behavior, strengthen your discipline, and help you think like a true professional trader. So, trader, if this video helped you gain more clarity, make sure to like the video, subscribe to the channel, and turn on notifications so you do not miss the next lessons. And let me know in the comments which topics you would like us to explore in future videos. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support the channel and a smart investment in your growth as a trader. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to keep producing this kind of educational content. Please also remember that the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you will find complete courses designed as a true trading masterclass. We teach liquidity, market structure, higher time frame analysis, and supply and demand, always focused on understanding price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency, because trading is not just about charts. It is about mindset, discipline, and execution over time. Our main courses include Smart Money Concepts, ICT, Technical Analysis, Trading Psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you better understand how markets really behave. Thanks for watching, and I will see you in the next video.